Okay, so hello everyone. I'm Tasha, your North Carolina life insurance agent. I'm going to show you today a whole life policy, illustrate a whole life policy for a 41-year-old. And I'm going to show you the difference with me. The first way I'm going to show you is without the term rider, and then the second way I'm going to show you with the term rider. So the first way, it's going to be very, very expensive because whole life policies are very expensive. So we're going to go into the illustration. I'm going to go through this really, really fast. So, so first we're gonna go here into the information part. 41-year-old male, and so he wants a whole life policy, and he wants to see what it looks like without the term rider. So first, he wants me to start with a $50,000 face amount. Okay, and let's see, we got to change this premium mode to monthly because he wants to be able to afford this policy. And so he want to see what it looks like without the term rider of $50,000. So let's see. So everything is good. Go to quick view. So this is not bad. This is not bad, but he feels like that $70 for 50,000 is kind of like too much for him. But he wanted me to kind of play around with it, and he wanted me to do $100,000 to see what the difference will be, how much extra it will be, with $100,000. So we're gonna go in and death benefit and funding, and we're going to change this to $100,000 because really he wants more coverage. But the higher the death benefit, the higher the premium payment is. I want you guys to remember that. And the older you are, the more it is. So we go in and we look. Everything's good. Go back to quick view. Okay, so now $137. He's like $100,000, $137. That's just way too much for me. So he wants me now to check to see what it looks like with a term rider, $100,000 term rider. So what I'm going to do is I'm going to go in and I'm going to change this amount, the base face amount, to 50,000 because that's what you will see on the illustration. And then I'm going to go into the rider and I'm going to see, he said try 100,000, so I'm going to do 100,000, and I'm going to do 100,000. So this rider is good for 20 years. So he will have this rider up until 20 years. But once the 20 years ends, then he will no longer have the rider anymore. So now we go back to death benefit and funding. We want to make sure everything is good. Everything is being paid monthly. Now this is a person that's not really worried about cash value. They just want life insurance. And so, but he wants a bigger policy because he wants his family to be protected, if that makes sense. Okay, so now we're going to go to quick view. Boom, bam. He has 86. He pays $86.33. His base face amount is 50,000. He has $100,000 term rider, giving his total death benefit $150,000. So he actually came out better this way doing this. Again, the rider lasts for 20 years. This is policy is good up until his whole life, and he's good to go. So which would you rather do? Would you rather pay this amount or would you rather pay 137? Thank you guys for tuning in. Bye for now.